Hi, welcome back to On-Chain Reaction. I'm your host, James Bennett, the CEO of ByteTree. So, I hope you all had a great new year. Let's dive into some of the metrics that we're looking at on the Bitcoin network this week. So, volatility is back. Whilst volatility is back and it is high at about 80% taken over 30 days and annualized, it's low relative to prior bull markets. You can see there the horizontal dotted line marking that 80% level that we've got up to in the last couple of days. You can see that peak on the right hand side in blue. And then going back across the last couple of years to January, from January 17, 3 years in fact, you can see that during the last bull market, volatility was consistently above 80%, pushing 100, even 150% in January of 18, so the tail end of that bull market. So considering the amount of price action we've seen, or price acceleration we've seen over the last 3 to 4 weeks, it is positive that the volatility hasn't gone too much higher, and probably reflecting the type of buyer that's in the market. So moving on to the next slide here, we're looking at what's happening on the Bitcoin network itself, which is currently settling close to $10 billion with a B per day of volume, which is significant and the highest we've actually seen on the network in its history. So with that, velocity is of course higher. Velocity is the speed that Bitcoin move around the ecosystem. So settlement value in dollars obviously is incorporating the dollar value of an individual Bitcoin, whereas velocity is a Bitcoin native metric. So, we're taking out that price impact. Here we're looking on the chart from September last year until current period on the right hand side. And what's really interesting is the correlation visually between velocity and price. So starting in the middle there, November 20, we see velocity was picking up, pushing price up higher. We saw in December that velocity started to fall again, and there was a retracement in the price around that, sort of pushing towards 20 and then coming back down. And then from the end of December, really, velocity accelerated upwards, and with that, price did too. So really moving in step. The more activity there is taking place on the network, the higher we see Bitcoin's price going. So third chart here for the day, we're looking at the miners' revenue, which is now close to all-time highs, generating close to $30 million daily. I should say in excess of $30 million even. We peaked up there at about $45 million, close to what we saw in late December. But this time seems more sustainable. Fees as a percentage of those total revenues are up at about 10%. So $3 million paid in fees to miners, the other $27 million coming through the block reward. That's indicated in the gold line. And you can see, since I've been touching on this for many weeks in these calls, but you can see from January, April 20, that last right-hand side quarter of the chart, a really steady increase in the percentage of fees that make up total revenues. Although there have clearly been some spikes driven by changes in short-term difficulty rate, we can see that there's a consistent uptrend there as fees are making up more of the revenues. Okay, so as we move on to the next chart here, we can see that miners are cashing in after a strategic pause in offloading their inventories. That's indicated here by the blue line MRI, which shows the difference between what miners are generating and what they're sending out of those inventory wallets for the first time. So when MRI is rising, they are offloading their inventory, and when MRI is falling, they are building up their inventory. So we can see that there has been and you'll see this better on the next slide, but there's been a steady increase in selling throughout 2020 as the price has been increasing. That trend actually stopped in mid-November. You can see circled there, we went from 123% down to 89% as inventories temporarily built back up. Interestingly, the gold line price, you can see during that time price was pretty flat. So as we've been saying at ByteTree and continue to say, miners are wise. They know what's the market bid feels like. If they don't think the price is going to hold their big movements offloading their inventory, then they're not going to sell. So we can see there that they've been holding back on that inventory. And then about 26th, 27th of December, that inventory that they'd been holding up, stockpiling, suddenly was offloaded in one large batch. It was about $300 million worth of Bitcoin in one go. And that's continued now to push MRI back up towards 143%. So, typically you see as the price accelerates upwards, actually we see an accelerating in the rate that miners are offloading their inventory. So the last slide here, we're looking at the total inventory levels rather than just the change from generation with respect to the first spend. We're looking at here at absolute inventory levels. So there are about 1.55 million Bitcoin in inventory at the beginning of the year, and about 1.53 million Bitcoins at current time. We can see throughout the year, as I mentioned in the last slide, there's been an offloading in that inventory. A few little spikes here and there, but generally the trend has been a depleting inventory, selling in to the increasing price and strong market. Notably, as mentioned, we saw with the MRI on the previous slide here, from mid-November to late December, you can see that inventory building up again, where miners were holding back on offloading their inventory, and then a huge drop towards the end of December as price spiked, and that's then continued to fall. So net about 20,000 Bitcoin have been sold through this year, maybe 25,000 Bitcoin, and those are moving out of miners and probably into the hands of people like Grayscale, possibly even PayPal's new buyers, and various other strategic interests who are looking to buy into this market for the long term.